Hello and welcome. I'm Bob Currie, contributing editor at The Future of Finance, and my guest today is Rob Krugman, Chief Digital Officer at Broadridge. How are you, Rob?
Good, good. Looking forward to our conversation. Thanks for having me.
Great to have you on. Always good to be able to catch up with what you've got ongoing in your technology shop at Broadridge.
Absolutely.
Rob, just for any future finance viewers that do not know you already, and I don't think there'll be many of them, but just for one or two that do, please explain your position at Broadridge and how this aligns with your technology, your innovation, and your solution development programs at the company.
Sure. At Broadridge, my role is really the role of a futurist. I'm responsible for looking at future trends and determining the impact they can have on the organization, and then working with the business units to identify strategies and approaches towards leveraging those technologies. Kind of one side. The other side is we have an innovation lab we launched about a year and a half ago called 605 Studios, where we create new businesses, new products that take advantage of these technology trends and look to create the future of finance.
Well, that's super great. And I mean, just looking a bit more closely at your approach, how does Broadridge think about innovation as a concept? What are the sort of core principles that underpin your approach to innovation and solutions development?
Yeah, it starts with the customer, right? And the customer could mean different things depending upon what it is you're trying to accomplish. So for products where there's an investor participant, right, it's really about the end consumer. For products where there's operations folks within a bank or a broker dealer, they're the customer. And so working backwards becomes really important and truly trying to identify the value proposition that you can achieve when delivering a solution for a particular group of people. I think the other side of that is an iterative, agile approach towards doing this. The realities with innovation is a lot of activities are not going to be successful, right? But each one of those opportunities becomes a stepping stone towards creating something that's better than what's there today. And so, with that mindset, if you're able to work quickly, validate concepts, and not basically do things because you think they're a good idea, but do things because you've spoken to enough people to validate that it's a good idea, allows you to do some really interesting um, work and to create some very interesting solutions. Yeah.
So it starts with the customer, and that client feedback is clearly a fundamental principle of the agile methodology to solutions development. So, just look at that a bit more fully. How are traditional sort of financial services organizations thinking about their futures? You support banks and brokers at Broadridge, you support wealth managers, you support buy-side asset managers and corporates. I mean, how is that changing in terms of how they visualize their future?
You know, I I can speak for myself. I've been in the financial services industry since the early 90s, which makes me feel very old, but that's okay. And we've seen periods of massive innovation and change over the last 30 plus years, right? We in the 90s we saw the evolution of the internet and the migration of many traditional businesses from being paper-based, relationship-based businesses, mostly offline, to become relationship businesses online, which has significantly reduced the underlying cost to the end consumer. And obviously tighten the belts for a lot of the banks and brokers around the way they used to do business as efficiencies start to enter the system. I look at where we are today from a technology perspective, and there's two technologies that I think are the future of our industry. AI is talked about in nauseum, right? Everyone kind of highlights and understands the value proposition that AI could bring to our industry and what it's capable of delivering from an efficiency perspective, but really more importantly, to provide an opportunity for us to be able to deliver personalized experiences to consumers and do a better job of providing not generic banking or generic wealth management solutions, but actually providing pinpoint solutions that match the needs of those customers. But the other one, and I actually think this is the most disruptive force we've seen in financial services in many, many years, is blockchain technology. Um, you know, Going back 4 or 5 years ago, the digital asset space and crypto got a very, very bad name because of some bad actors and some real challenges that existed in the market. Since then, what we've seen is really a recognition that crypto is an asset class and it's going to grow as an asset class, and we need to support it and we need to nurture it, and there's real value there. But beneath all of that, there's this magical technology called blockchain. And we think about Ethereum and Solana and Cardano and all these other layer one blockchains that have emerged. But what we're starting to see is the financial services industry embrace this technology and rebuild itself on top of it. And I think on the other side of that, what we're going to see is more efficient systems. We're going to see reduced cost for investors and other consumers that participate in financial services, easier access. Um, but it's going to change a lot of things probably over the next 3 to 7 to 10 years is where this evolution is going to occur. And I think the other side of this is going to look very, very different than where we are today.
When we look at the sort of changing client needs, is your day-to-day dialogue still shaped principally by some of those, what I might call in quotes, the sort of TradFi customers that I've just alluded to, or is it increasingly also shaped by the digital first guys, some of the wallet holders, the digital exchanges, the digital first intermediaries?
So we've been using this term. I think we've heard it for the first time at Paris Blockchain Week a few months ago, called OneFi, right? Where I think for years the digital industry has tried to create this artificial separation between traditional finance and DeFi, kind of decentralized finance. We're starting to see the emergence of that coming together. And so it's really both sides, right? If you're what we're starting to see, and it's been very notable over the last several weeks with announcements by Robinhood and Coinbase, Kraken, and others, is really a desire to get into traditional financial services, right? Robinhood probably doesn't belong there. Robinhood was already in traditional financial services. They've kind of added the digital side. But the others are talking about the listing of equities. They're talking about funds and other asset classes on their platforms, which is really exciting, right? If you think about the tens of millions of people that are using these exchanges, essentially quasi-broker dealers, to be able to participate in markets, more choice, more product is very exciting. And a lot of those products are going to be tokenized versions of what we typically think of. Similarly, on the traditional finance side, right? When it comes to crypto, if you're a wealth management firm and you're seeing 5 or 10% of a client's assets being held elsewhere, there's a strong need to be able to support that and make sure that you can provide advice and the same value propositions that you've always provided in the traditional world. But if we look beneath the covers on both sides of this, what we're starting to see is an emerging change in the way that we deliver financial services, the way information flows, the way money is going to flow, right? So, an exciting piece of this is about a week ago, the stablecoin bill passed the Senate in the United States, and the expectation is that over the next few weeks, we'll see the same thing happen in the House. Once that occurs, we now have digitized, tokenized money that can be used to really embrace everything else that's going to be tokenized. So if we kind of watch the dominoes fall, if you will, we already have some money markets that are in market that have been tokenized. Once you have tokenized cash, tokenized money markets become the next really important component of this because you want to be able to earn yield. After that, we hear organizations now starting about tokenizing a percentage of their shares that are outstanding, private, alts, others. And why is this? Because there's a desire to be able to reach and extend the reach of these assets. And today, while we're a global economy, and we have global markets, they still tend to operate in siloed principles, right? If you're a public company in the United States, there are some limitations on the ability of global participants to be able to buy that underlying shares or that underlying stock. Maybe they do it through funds, maybe they do it through ADR type listings. And similarly, if you're a European company, participating in the US markets, it can be difficult to attract US investment. At the retail level, I should highlight. The institutional level, not a problem. So all of a sudden, this new technology comes about and we can start to tokenize things. And when we tokenize things, the ability to not just have a listing on NASDAQ or New York Stock Exchange or the London Stock Exchange, but to have listings on the top 50 exchanges globally all at the same time, facilitating 24/7 trading, allows us to think of a day where a public company may not just have reach to 200 or 250 or 300 million consumers or investors, but rather 2 billion or 2.5 billion investors around the globe. That's exciting from a liquidity perspective. It de-risks the investor pool from a corporate perspective. And so I think that's where we're headed.
Just to look at that point a bit more fully, I mean, you've referred to the importance of distributed ledger in your product suite and in the platforms that you're supporting that on. I mean, Broadridge was quite an early mover in its release of your distributed ledger repo solution. I
Yes.
mean, how much further have you taken the distributed ledger piece across the product set. I mean, you've already alluded to the importance of tokenization and how you're extending solutions in that area. Where does distributed ledger, where does blockchain fit within the Broadridge solution suite?
I think going forward, it's a core capability set, right? So you mentioned the repo solution where, we've recently announced we've surpassed $2 trillion in transactional volume on a monthly basis. So it's really an example of, the strength of that technology in an enterprise environment to be able to really facilitate efficiencies and change. What we're starting to recognize though is that we're at that tipping point, and I think a lot of people are starting to hear it, where we have mutual funds that are dipping their toes, right? It started with companies like Franklin Templeton and Wisdom Tree, and then BlackRock creating money market funds. We've seen Wisdom Tree actually tokenize mutual funds. We've seen private credit. Apollo has started to tokenize private credit. We've seen the same thing now where outside of the US, we have entities that are buying US shares and tokenizing it to make it available for non-US consumers to be able to participate in our markets. And so as part of this tipping point, as Broadridge, we can't not be there, right? We have to be not just a proponent of this technology, but we have to think about the impact it's going to have across our entire ecosystem, whether that is, the post-trade platforms that we support globally for our different clients and reporting. On the wealth side, how do you think about integrating wallets and custody solutions to make sure that, a customer of a large full-service broker-dealer can support crypto just as easily as they can support traditional financial instruments? And then, on the flip side of that, if you think about communications and regulatory disclosure, one of the really interesting components of this is that while the principles of regulatory disclosure around protecting investors and making sure that they have access to the most up-to-date information about the assets they hold are always going to be the same. But the delivery mechanisms about how you actually distribute that information is going to evolve, right? Today, we live, at least in the US markets, we live in an omnibus beneficial ownership based model. Globally, that's not so much the case. But when we think about the core technologies of blockchain and distributed ledger, we think about wallets and we think about hash keys and unique identifiers that could be used to identify who holds a particular asset at any given time in a real-time manner. And so we need to embrace the technology and we need to update our systems. And so what it is that we're doing, we're not just creating strategies that think about what does this look like. We're looking at how do we leverage the investments we made in DLR for new asset classes and other types of bonds. We are, one of the founding members of the Canton Network, and a public blockchain that has private components, which is very attractive for a lot of financial transactions. And then we're thinking about things like corporate actions in a decentralized ecosystem, and how do you make sure that, as assets are trading globally 24/7, investors can be made aware of major events occurring on the underlying assets and what that needs to look like.
That's useful, and I mean, I think we'll come back to that very point, later in our dialogue. But just in terms of how you're offering new insights to clients in managing the regulatory change, information, and governance around digital assets. I mean, you've already alluded to this sort of fast changing. Well, it's not necessarily been fast changing to date, but it seems to be faster changing now with sort of focus in the White House on getting that sort of firming up of the regulatory function in place. You released a ClearFi platform not so long ago. I mean, how has this been an important step in sort of bringing new sorts of data insights to the user and helping them to run with that regulatory change agenda?
Absolutely. So, we do this, and I'm going to jump to ClearFi in a second, but the first part of your question was kind of about the regulatory environment. One of the things that we have internally is we've created a dashboard where we're constantly looking at the regulatory environment related to digital assets, crypto, stablecoins, globally, and getting updating that on a very frequent basis so we could actually provide thought leadership to our clients as they're starting to think about this. Because today's world, we often think about regulation in the form of the different domiciles that we actually participate in. Tomorrow's world, there's going to need to be some level of consistency as we think across these domiciles and these regulatory regions, because these assets are going to start to trade across, the barriers that we typically think of. And that really comes in different flavors, right? I think that what we've seen is we've seen a bit of a sea change in the US, and then globally, I think the global market was there before we were, where there's a desire to allow innovation to flourish. but innovation to flourish with controls to make sure that consumers are protected, right? And that consumer protection component is such an important part of making sure we establish mature markets here. And so how do we think about that playing out and how does it work together? Well, one of the things we did with ClearFi is when we started as a company that has a history of working to ensure proper disclosure and helping our clients to be compliant, we wanted to understand the needs of the investor, right? So we went back to the customer and we started with a survey where we started to evaluate how participants in the crypto markets were actually performing fundamental analysis on the underlying assets that they were investing in. And what we realized is that while there's a portion of the investor base that truly understands the technology and how it works, there was a much broader group of participants that really didn't understand. And when we asked things about tokenomics and we asked about network and platform activity and changes to the underlying technology, we found that people really didn't understand how to evaluate that. So what we started to do is we started to read through and understand the data that was available. And we started to create a taxonomy, an ontology of data elements that says, if you were going to create a fundamental data set, and when I use that word fundamental, I think about the data that companies today may buy from, that's derived from EDGAR filings or from CDR filings or ESMA filings or FCA filings, and being able to take that information, codify it, and be able to use it for analysis, it doesn't really exist in this space. And the reason why is because there's no individual company that can facilitate that. There's no Ethereum corporation. There's no Bitcoin corporation or Cardano corporation. There are foundations and membership groups that support it, right? And the owners that participate in the ecosystem, but it's a very, very different model. It's a model that calls for the aggregation and consolidation of data from hundreds of different locations, both on-chain and off-chain, the standardization of that information and validation that the information actually is truthful and comes from a truthful source, and then the presentment of that information to the actual individual participants as well as the institutional participants across a common vernacular that they can actually use to compare one asset versus the other. So what is ClearFi? ClearFi is kind of the result of that. So it is a data product where we've created a taxonomy of hundreds of data assets that are derived from hundreds of data sources, mapped against a standard taxonomy, presented in a simplified, plain language way, where an individual could go in and say, okay, what is this asset? What is its purpose? What changes have happened recently? What are the risks of investing here? How does the economic model work? How is it growing or shrinking based upon network and platform activity? How do I participate in governance? What types of governance activity is going on? And where can I get more information if I need it? And, if we think about where that type of information really should be presented, it's through the various channels where consumers can operate in this particular ecosystem. So the exchanges, the broker-dealers, wallet providers, whoever's providing access, and we're starting to see this from a regulatory perspective, regulators are suggesting that if you're going to provide access to individuals to invest in this particular asset, you need to provide information about what they're investing in. And so what we've tried to create is a standardized capability or standardized data set that is it guaranteed 100% accurate? Of course not, because this is a community-driven ecosystem. So changes happen all the time, but a way of being able to get that information when you actually purchase a product, and then on an ongoing basis, be updated when major changes happen, and then be able to look at a periodic basis, when you want to look and get an understanding of what it is that you're investing in, what's happened there.
That's a huge data gathering exercise you've just described, Rob. I mean, that's a lifetime's work in its own right. Collecting data elements that are sitting on chain and off chain across a huge range of jurisdictions and in different areas. What was the process you applied? Was this driven by the community, where people are providing sort of insights and alerts that feed your database? How did you go about that?
To a certain extent, right? And that's one of the unique things about this industry, right? For every news article you could get from a trusted source of news, there's also information on GitHub, right? And Discord and even X, where information is presented, and it's all meaningful, relevant information. So it's around identifying trusted sources of information for the individual assets that you support. So right now we're supporting well over 400 assets. We're on our way to 500 assets in the crypto space. And then identifying sources of truth for each of those assets, being able to get information, being able to ensure that there's more than one person saying about this, that this is, and being able to kind of then consolidate that and present that in plain language. And so to give you some examples, if you think about, I use Ethereum often as an example, right? So if you think about Ethereum, on the governance side, Ethereum literally has hundreds of governance proposals on an annualized basis, right? And some of them are really, really technical and difficult to understand. So when we think about disclosure, there's two different things that are important. Number one, you want to make sure people have insight into what those governance proposals are, and there's some plain language that explains to them what they actually mean. And number two, which is probably even more important, since so many of the proposals are technical in nature, describe the impact when those changes actually occur and what they're actually trying to support, right? Whether it's to provide efficiencies on the blockchain, whether it's providing new features and capabilities. And then tied to that is to demonstrate the network and platform activity that's being developed on top of it. And so one of the things that we've been asked in the past is, when you do something like this, how do you protect consumers from meme coins, for lack of a better term? And what we've said is the following, right? A lot of the tokens and a lot of the assets in the space have underlying utility, which is what's providing the underlying value of purchasing that asset. Meme coins, think of that. If we think about them like collectibles, what becomes important there, though, is that you provide appropriate information when it's available. And if the information is not available, it's even more important to say we couldn't provide appropriate information about this asset. Again, it's about ensuring that when an individual is making a decision about purchasing one of these assets, they know what they're getting themselves into. And for certain assets, that means there's a robust set of information that could be truly understood and you can read through it. And for other assets, there's less information. But you know that going in, and then you decide to take the risk yourself, which is very much like the way the over-the-counter markets work today, where you have, pinksheets.com is an example I often use, right? They have really good information for lots of organizations, and then they have an icon, which is literally a skull and crossbones, which basically says, invest at your own risk. We can't get any appropriate information about this asset.
Buyer beware.
Exactly.
Rob, just bringing it or widening the picture a little bit. I mean, you noted in our earlier discussion that not every development idea is a success. What has that, since the early 1990s, you've been working in technology and financial services. What has that long career taught you in terms of the factors which shape the difference between success and failure?
Well, I always joke that the biggest lessons I find are a result of failures, at least when I was younger in my career, versus successes, right? Successes, sometimes they just happen because they happen. We have a good idea, we're going to implement it, great. I was in consulting for many years, and when failures happen, there's lots of fingers to point, but you learn a lot through that exercise about what to do better the next time and how to work the next time. And I think when it comes to creating new products, and I've been part of 4 successful startups in various roles, chief product officer, different types of roles. What becomes important is starting small, right? Because when you start small, you fail small, right? But when you start small, you win big. And what do I mean by that, right? If you can be iterative and say, we're going to try to solve this problem first, right? Let's not draw out a 6-year plan or a 3-year plan day one. Let's focus on getting that initial minimal viable solution out and validate it and test it and really listen to what people are saying. Because if you can move really, really quick, you don't get stuck on your beliefs. You basically listen to what people are telling you, and it allows you to iterate the solution. And quickly you can determine if, number one, you know what, we were wrong. This is actually not a market, or it's a market, but we're too early. And we did that a few years ago in the crypto space. We were looking at digital wallets and thinking about creating digital wallets, and we started to put some ideas together that around a wallet that you could share access to different parties, an advisor or others. We were way too early. So we took it, we put it on the side, and now we're starting to dust it off again because the market's actually starting to head back in that direction. So that wasn't a failure, it was a learning process. but we didn't spend a huge amount of money. We didn't spend a huge amount of time doing it. We tightened the parameters around it and asked ourselves every 30 days, should we be continuing to do this or not? And that check-in and that check-in with yourself is so important, and being honest with yourself, because what it really avoids happening, and this is a challenge I've seen in companies across my career, is the loudest person in the room syndrome, right? Just because someone has the greatest title doesn't necessarily mean their idea is going to actually work, right? And too often than not, if you hear about high profile failures, it's because we've come up with an idea and we were not willing to listen to the actual market and understand what they were telling us. And $100 million later, you've created something that really has no marketability whatsoever. So it goes back, constantly challenge yourself, constantly validate your findings, and usability testing, usability testing, usability testing. Yeah.
That's really interesting. I mean, I'd just like to sort of hear a little bit more about, using that approach, how you select projects to go within your 605 Studio
Yeah.
Innovation Lab. I mean, how do you select the projects that you adopt? But, going back to the point we've just been discussing, how do you also decide, when to move forward, which one goes to live implementation? And maybe in some instances, there are projects where you've just got to say, look, either the time's not right or it's consuming too much resource and it's not going to generate the necessary return. What sort of formula do you apply?
So we look for ideas from a number of different places, right? So my team is looking at trends, and we're kind of looking at those trends and saying, are there opportunities here, right? And those trends could be from stuff that we read, it could be from conversations we have with third parties, and that's kind of one bucket of kind of inbound ideas. The second bucket is meeting with our business units and our product leaders and hearing what they're thinking about and what they're trying to solve for. And I'm going to come back to that one in a second because it's a really important one. And then the third bucket, which is my favorite bucket, is talking to your clients, right? So one of the things we like to do is we like to have what I call innovation conversations. These are not sales dialogues. This is sitting in a room with the people that are responsible for the future of many of these organizations, whether they have innovation titles or product titles or strategy titles, it doesn't really matter. And it's really asking them, what are you guys thinking about? Like, what are the technologies you're excited about or the challenges that you're concerned about? And is there an opportunity for us to explore them together? Right? Those become the best ideas. But going back to the product side, one of the other things around innovation is to recognize that there's different types of innovation, right? And I usually use it on the scale of synergistic innovation on one side, disruptive innovation on the other side. And I think it's my opinion, and I think it's many folks' opinions, that synergistic innovation or kind of iterative innovation really belongs in the business units and the product organizations, right? They have a strategy. They're really good at what they do. They've created these wonderful products, and they need to iterate them and listen to what's happening in the market and modify the underlying solution set to continue to support and be relevant. Then there's disruptive innovation, which is where, for example, our innovation studio comes into play. These are the technologies and the trends that's really hard to work within the business units and the products. And why? Because they're likely to actually disrupt the way the business units and the product teams work. And that can be very, very complicated if you're responsible for, operating an underlying existing business and tactically thinking about that business. And on the other side, think, oh my goodness, there's this technology over here that's likely to actually completely disrupt this business over here, or at least significantly change it. And so what we've tried to do is for the synergistic iterative stuff that comes in, we try to push that back to the product teams and educate and work with them and help them to think through those things. And then for the disruptive things that come from the product teams or from our analysis, or more importantly, from our clients, how do we actually think about doing that somewhat independently, with then a goal of, if these processes are successful, identifying where we would put them, right? So ClearFi, for example, we just moved into our regulatory business because it made sense. It started in the lab and we moved it over. We've done that with other solutions in the past. We have a product called Wealth in Focus, which is a reimagination of wealth communications that started in my team, and it graduated to be part of our wealth business and our bank broker dealer business. But sometimes it will fit in an existing product team or business. Sometimes it won't, right? Sometimes it's like, okay, it's time to create a new business unit because this is something that we really don't have a good home for. Let's create a new place for it. And then there even could be areas where we're exploring technologies and solutions where it may actually be better to reside outside of Broadridge, right? And that can be the form of a consortium or a spinoff or different types of things. We haven't done a huge amount of that. Consortiums, we've done quite a bit of. And just because it makes sense, it can't be owned by one particular entity.
So you keep a stake, but you push it out to a
Let it
legal
fly.
entity.
Yep. Yeah. And,
Let it
I
fly.
think there's lessons to be learned from other, what I would call innovative trailblazers in our space. The one I often look at is Fidelity. I think Fidelity Labs and what Fidelity does from an innovation perspective is really, um, it's a testament to who they are, and it's something that other organizations can strive to be. They have created many new businesses that they've actually spun off from Fidelity. They've created new products and services that are now part, including their digital assets business, for example. And so, you know, taking that technology mindset, right, becomes really helpful. And I think the way organizations can facilitate this is, you know, operationally based organizations are typically not willing to hug innovation, if you will. It's not like it's not in the DNA, right? The DNA is, making sure that you make the donuts better and better every single day and making them more efficiently. I think that when it comes to innovation, we can take lessons then from the companies that we all work with, right? So it makes sense to establish relationships with Amazon Web Services and Google and Microsoft and other technical leaders because you can learn a little bit about what they're doing. It's important that you teach folks about design thinking and the need to start with the consumer in mind. And whether it's called work to be done or jobs to be done frameworks where you actually look and understand what tasks make up a given persona's daily occurrence and what challenges exist is always a good place to start. Yeah.
That's interesting. You've said operationally driven organizations are not always the best drivers of innovation, but at
No.
Broadridge, you've got no choice to a degree. I mean, if we look at how you're knitting together trad or into a 1FI unit, you have the tradfi starting point, you have the digital innovation that's developing as we speak, but within that, as you knit together and support digital and traditional assets, you still need to support the asset servicing piece off the back of those, across your
Yes.
traditional brokerage business, the corporate actions that you've touched upon. You have a very powerful ICS business, your investor communications business. So what are the mechanics of sort of putting that all together, of supporting the asset servicing piece off the back of what's an increasingly digitized asset pool and book of business?
So I think the first thing is, and it's not a particular solution, it's transparency. It's making sure um, that from an innovation perspective, we're being transparent with the business about the things that we're working on. That doesn't mean we give them every detail right up front because we do a lot of research that goes nowhere. But when we actually have something and we start to kind of identify ideas around what this potentially means, it's around having briefings and kind of explaining. What we don't want to do is we don't want to scare people, right? Right? When you don't want to scare people and say the sky is falling, this business will no longer exist, right? So what you want to do instead is you want to take them along that trail with you and constantly educate about where these things are happening. And truthfully, often with technology, it's important to remind people that this is not happening because of, and this is not just for Broadridge, this is for everyone. This is not happening because of something that we did poorly. It's actually happening just because the technology is getting better and better, and we need to evolve to be able to support that. So now let's have a conversation around how do we think about things like asset servicing? How do we think about post trade in a more digitized, tokenized environment? And start to identify the experiments that we want to make and the potential design partners that we want to work with that are willing to take us through that journey with us. And so, if you think about specifically the corporate action ecosystem, one of the things that, I'm really excited about is that, as we start to see the emergence of tokenized equities, and if you would have asked me a year ago, I would have told you that somewhere 5 to 7 years out. If you ask me right now, I would tell you it's in the next 3 to 4 months. We're going to start to see public companies take a portion of their equity. They'll take those shares, they'll lock them up, and they'll issue tokens, which will be able to trade for those that want to actually participate in a digital version of these ecosystems. That changes the way things work, right? It's going to change the way we communicate with individuals and the way we push them information, the way that they respond to that information is going to change. And that's okay. And so what it really then comes down to is how do we take and start to rethink some of the underlying plumbing that's supporting the existing infrastructure to support this new infrastructure. And usually what ends up happening is at the beginning, you have kind of two streams. You have the traditional and you have the new. And then over time, what potentially happens is the new eventually starts to feed the traditional as the traditional starts to dissipate and becomes less and less. And so that's kind of the model that we're thinking about as we think about the impact on the corporate action space and what that could look like. And how do you do this in a global way where, frankly, we're not going to have centralized repositories which tell us where shares sit anymore, right? We're not going to be able to go to the DTCC or Euroclear or others and say, give us the entire current share base and where they actually reside. And one of the more interesting, probably underlooked points of guidance that was presented by the SEC just 2 weeks ago was that transfer agencies and issuers can start to use blockchain as an underlying golden record of truth of who holds their assets. And that's a huge step, right? Because what it starts to, does it disrupt? Of course it does. But at the same time, it starts to enable organizations to start to embrace this in their own timetable, in their own way. So that's not to say we're not going to have traditional books and records. We're going to have that. We're going to now start to have a general ledger-based version of that. And then eventually you get to a point where you say, does it make sense to put the traditional on the general ledger so it's one consistent view? I think we'll get there. Yeah.
But the mechanics look quite similar, Rob. I mean, you've still got a centralized record. I mean, what this eases is all the reconciliation headaches we've had over time.
Yeah. But I think the beauty of it, right? So if we think about kind of the beauty of the technology, is that smart contracts are going to be very helpful here, right? Because what we know is, these assets are not going to reside on one blockchain. If they're going to reside on one blockchain, this would be really easy. But, we've already seen it. Think about some of the stable coins like US dollar coin. They're probably running on 18 different blockchains right now. And the expectation is moving forward, public companies are going to actually have tokens running on 18, 20, 30 different blockchains. You're going to have to be able to look across all of those, get a consistent view. And again, that's where the smart contract capability becomes available because we can programmatically define things, programmatically define maybe where corporate actions are going to be found. We could programmatically facilitate alerting to the underlying token, which is sitting in an individual's wallet to explain to them that there's something happening, whether that is an underlying change to the asset or just an update. Hey, here's some information that's changed about this asset. Here's your statement, right? Like these things are going to take different structures. They may look a little bit different than what they do today, but that doesn't mean they're going to be any less important than what they are today. Yeah.
Super. Just a couple of quick points before we need to bring things to a stop, Rob, because we are getting a bit low on time now. But I mean, clearly you've worked in entrepreneurial startups and smaller organizations. What's the key to making that entrepreneurial spirit work in a large organization such as Broadridge?
I think, if we're being honest, it can be sometimes difficult to kind of create entrepreneurship, as I often call it. It's very easy in a startup because in a startup, you're basically at the beginning, you're making sure you can eat, right? So everyone's all on the same page. You have 20, 30, 40, and then eventually hundreds and thousands of people all trying to achieve the same thing, everyone willing to do every single job. I think when you get to be a mature, larger organization, the key is to remind people of the importance of innovation, right? And to, Clay Christensen said it best, right? The innovator's dilemma. It's really, really easy to get complacent and get comfortable and say, look what we did, right? This is awesome. Nothing is going to ever change. And inherently, stuff always changes. And so if you have that mindset and you make sure that your business and product organizations are thinking that way and your technology organizations are thinking that way, and they're reading and they're educating themselves on what's happening outside, I think innovation happens naturally, which is really important. And then I do believe that it becomes important to have groups looking at the future. There are certain organizations that have been somewhat effective in trying to do that within the product organizations. Most have not. I do think you need whether it's a center of excellence for innovation, some type of innovation lab, or where we can test out concepts and ideas and understand the potential impact. And what I would say is if you look at AI, for example, there's probably not an organization right now on earth that doesn't have some form of AI lab that's trying to understand the implications of this. But it needs to be broader than that. It really needs to be looking at what's the future of my business? How do I make sure that I'm staying relevant? Because when you stop asking that question, a funny thing typically happens. You wake up one day and you ask yourselves, what in the world just happened?
That's so true. And yeah, very interesting. I mean, on that point, I think my closing questions really, what do the fruits of your labors look like over the sort of near to medium term? I won't give you a time frame, but you've got
Yeah.
guys looking at the future. What does your vision look like for that medium term time frame?
So, as we look at the future, the types of experiments that we're working on right now is we're doing a lot of work in the identity space because we still believe it's very, very broken. And it really is a major impediment to a digital future of simplifying identity for consumers, but really importantly, simplifying it for the large institutions that rely on that information to comply with regulation. On the blockchain side, we're preparing for a future where the vast majority of assets are tokenized. It's not going to happen overnight, but we're going to get there. And then we're thinking about, how do we utilize AI to create new types of solutions and new types of products? And I will tell you that, not it, I've become, I think every day I use different AI tools. And from an innovation perspective, what I've become really excited about are some of the tools that allow you through a series of prompts to almost immediately create an application that you can test. It's a superpower, right? No more sitting for 15 days thinking about concepts and ideas. You create a stream of consciousness, you type that in, and 5 minutes later you have a working application that you can iterate on and show someone and get their feedback, right? That's awesome. It really is. It's an awesome power, and we have to be careful not to overuse it. But when used properly, it's going to allow us to, increase the velocity of the innovation funnel, and that has me very excited. Yeah.
So it's almost presenting a sort of a virtual proof of concept from your laptop, really, just short circuiting that design and development process.
That's exactly what it is. And some of them are, they're complete front end tools where they'll actually give you a working HTML application that I can actually take out for a stroll and show people and get them to play with it and get them to say, you know what, I really don't like this. Oh, give me a second. Type another prompt. What do you think of this? Ooh, that's what I like. And so you can quickly get to a place where you can kind of understand the needs of customers in a way that's so visually appealing because after you're done, you could actually give it to them and say, why don't you play with this a little bit? Why don't you share it with other folks and come back to us and tell you what you think?
That's fascinating. We'll need to get you back on just to talk about some of the potential opportunities and implications that come out of that process.
It really does. I always joke I am a tech geek to the highest degree, and I don't think I've ever been. I go back to the 90s where the internet was at its infancy, and we were working and helping companies to go online. And I look at where we are now, and I think the impact here is going to be even greater. I look at what AI is capable of. I look at what blockchain is capable of, and I think machine learning fits into that conversation as well. And the other side of that is awesome, right? It's going to look very, very different than what we're used to today, but that's okay, right? And I think there's always concerns about do I still have a job on the other side? There's always new jobs and there's new technologies that as new technologies come out. But as we follow this process, it's a pretty cool time to be able to build and to innovate in this ecosystem because the tools are just so much better than they were yesterday, and tomorrow they'll be better, and the day after that they'll be even better. Yeah.
That's a really exciting and interesting vision for the future. So thanks, Rob. Time is up, so I'm going to have to close it down, but we've certainly got opportunity to talk over that in more detail in future weeks and months, I think.
And
So
thank you,
thanks.
Bob, for having me. This was great.
No, it's brilliant. Thanks very much for our viewers and listeners for tuning in, and we look forward to joining you again very soon. Thanks so much, Rob.
Okay. Bye bye.